What is going on, everybody? Welcome back to Trading Learning 101. Today's subject, we're going to talk about Fibonacci Arcs. For me, as a day trader and doing technical analysis in the stock market, Fibonacci retracements, fans, arcs are a big tool that I always use to help forecast the market. We're going to break down what Fibonacci Arcs are, how to use Fibonacci Arcs, and just talk about the fabulous world of Fibonacci. If you're interested, I just started up a new playlist revolved around Fibonacci. Simply go to my profile on YouTube, go under the playlist section, and select the Fibonacci playlist. Over time, this playlist will grow. I have many Fibonacci video ideas that I will be adding in the future. I will also leave a link down below in this video if you're interested. If you're new to the channel, please hit that subscribe button, join the Trading Learning 101 community where we all grow as traders and investors, and let's jump into the video, everybody. To kick things off, we're going to look at our trusty pal, Investopedia. If you don't know about Investopedia, it is like the dictionary for the stock market. I highly recommend this website. You can learn so much from Investopedia. All you got to simply do, go to the search bar, look up any term that you're interested in, a question. It'll pull up blog posts, all from the past, from people who've written blog posts on the subject that you want to know more about. So today's video, we're going to look at Fibonacci Arcs, the half circle that I'm sure you've all seen in the past and you're interested about. Fibonacci Arcs are not complicated. They're very, very easy. Do Fibonacci Arcs work all the time? No. Just like any indicator or tool that we use for the stock market and trading, they don't work all the time. And the way you have to look at these tools, they're not perfect. You have to look at them as if they're a science and an art project. They're not going to work all the time, but when you use these multiple tools and entwine them all together, when they all start to align, that's when you can start to see the stars align in the sky and the chart to start looking sense to you. So what is Fibonacci Arcs? Fibonacci Arcs are half circles that extend outward from a line connecting a high and a low called the baseline. These arcs intersect the baseline at the 23.6%, 38.2%, 50%, the golden ratio 61.8%, and the 78.6%. Fibonacci arcs represent areas of potential support and resistance. These arcs are based on both price and time, as the arcs will get wider the longer the baseline is, or narrower the shorter it is. Fibonacci arcs are typically used to connect two significant price points, such as a swing high and a swing low. A baseline is drawn between these 2 points, and then the arcs shown where the price could pull back to and potentially bounce off of. Now they have a little chart right here with an example of the Fibonacci arcs. They have it plotted from the swing high right here, your baseline, all the way down to the swing low, creating this half circle here with all your Fibonacci projected numbers. Now, as the price of the stock and over time, as it moves up and down, you will see these half circles act as potential support and resistance. And we're going to go over many examples with different charts in this video to show you a clearer picture of how this works and how to plot it on your charts. Up next, real quick, I'm sorry I'm blinding you guys with this white light, but I'm going to show you a real quick 40-second video from Investopedia explaining the Fibonacci arcs.
Fibonacci arc as an important way to predict future activity. To create an arc, just take the high and low points on the chart and draw a dotted line connecting them. With the movement of a compass, trace arcs passing through the 61.8%, 50%, and 38.2% points. The curves line up along anticipated support and resistance levels.
If you want to visit Investopedia yourself, I will leave a link down to this website down in the description of this video. Now let's get into some charts and show you guys some examples of how to plot Fibonacci arcs onto your chart. This first example, we're going to be looking at the SPY on the 10-minute time frame. And you will notice when using Fibonacci tools, Fibonacci retracements, projections, fans, and arcs between stocks and ETFs, Fibonacci tools work really well with ETFs. They work good too with equities and stocks, but you'll notice they'll work a lot more better with ETFs and indexes. This is a 10-minute chart of the SPY. We get our Fibonacci arc tool out. We plot the high from right here, and we draw our baseline all the way down to this low right here. And you could see when this stock bounced its way up, bounced right here, found resistance at this 23.6 level right here. Then when it finally came back up through right here, it broke through it, came back down, and then it was acting as support. And then it ran all the way up to the next ring here, and you could see it right there acting as resistance. We'll zoom in a little bit so we can see it a little better. Acting as support right there off that ring, running up to resistance right there. Finally getting over it, going sideways, and look at right there at that ring, finding resistance. So you just gotta look at it as if it's an art form. And another important thing I wanna mention with Fibonacci arcs, and this is really important. The longer your baseline is from a swing high to a swing low, the wider the rings are gonna be. And you gotta be careful with that range. You always gotta keep note, if you're trying to trade with Fibonacci arcs, the range. How long and wide is your baseline? Because if we look right here, between this ring right here, the price is at 240, up to the top of this ring right here, it's at 260. So a 20-point spread between the rings right here. And if you get caught in a stock that's going sideways, like it is right there, you gotta be careful buying into the middle of that, or you're holding on to a winner and it's going sideways and it's just slowly like decaying down. You gotta be careful of stuff like that. So always keep note of the range the longer your baseline is with the arcs. Let's take a look at the real estate sector, XLRE, for an example. Let's focus on this little area right here, and then we'll focus on this move from that low up to this high. Let's zoom in on this chart, this area right here, and we could see it topped right here, bottomed right here, and when the stock came right back up, it topped again right at that level, and then found support right at that level. Let's get our Fibonacci arc tool and draw an arc from this swing high down to this swing low as it starts to bounce off of this right here and moves its way on up through these Fibonacci arc rings. It plays around at these ring levels. It plays around right there, runs all the way up, finds resistance and support at this level right here, and if we go all the way around, it's the 61.8 golden ratio. Gets over it, then finds support at it, it's holding, and it moves its way on up to the next ring, the 76.4% retracement level, and you just see how it plays it, like rides the ring of the curve of it, and then again finds support on it right there and moves its way on up to the next ring right here. Again, it's all about how you look at it. Pretty much the basics of Fibonacci arcs, which with each ring level on this swing from the high to the low, each ring the stock played at. It found resistance at it, got over it, found support at it, and slowly moved its way on up to the next ring level. Now let's zoom out and let's measure from this low right here all the way up to this high. Get our Fibonacci arc tool from the swing low all the way up to the swing high. Measured that. Let's zoom in a little bit. When the stock pulled back, you could see it played around at this ring level right there and then broke through it and fell all the way down to the next ring level and hung around right at that level, which is the 38.2 retracement level. Hung around that level, ran all the way up to this level right here, and it's still hanging around right at that ring. This ring right here, just hanging around, and then just went sideways through each of the rings. You see how pretty cool that is when you just measure with Fibonacci retracements from swing lows to swing highs to swing lows. It really is fascinating how stocks confine to these measurement levels and retracement levels. This is why I'm so fascinated with Fibonacci in the stock market. You really see it work a lot with projections, retracements, and a lot of people use Fibonacci. A lot of people. Let's take a look at some more examples. This chart, we're going to look at a 3-minute time frame of TLRY. We're going to draw our baseline from the swing low right here all the way up to this swing high to measure all of this future price action in this area right here. After the stock topped out right here, you could see it came down to this ring right here, quickly bounced off of it, and then fell through it, and then it was all acting as resistance right here. The next ring it came to was right here. It was bouncing off of it and even went sideways right through it for support, and it just rode this ring, this 38.2% ring, all the way up, right up into here. More sideways action, right to the next ring, right there, and then just broke its way down through each ring, going all the way down right here. And what I really want to point out is right here it found resistance right at this ring, the 76.4 Fibonacci level. There's multiple ways you can mess around and play with Fibonacci arcs. I did this big swing from the low way over here to the swing high all the way up here. You could also even do from the swing low right here up to the swing high right there and just measure this retracement as the stock pulls back. And if we zoom in on this, from the swing low right here up to the swing high, this stock pulled all the way back to this level right here, this Fibonacci arc ring, and if we measure all the way around, it bounced right off of that 61.8 level right here at $8. It popped up to the next ring right here and the next ring up here up to $8.50. So a little 50-cent bounce. Stock tops out at $10, pulls back $2 down to $8, bounces off of the golden ratio 61.8 for a nice little 50-cent pop from 8 up to $8.50, bouncing off of the 50% retracement. I can't preach this enough. It's just all about how you look at the Fibonacci arcs. Mess around with it, have fun with it. Measure from swing lows up to swing highs down to swing lows. It's an art form. Have fun with it. Be a scientist. Test, and do whatever works for you. Let's do one more example here, looking at ticker symbol TRIL on the 3-minute time frame. We're going to draw our baseline from the swing high right here all the way down to this swing low. And what I want to point out with this is when it bounced up and ran all the way up to right here, it found resistance right at the golden ratio 61.8 ring. This ring right here. It found resistance at right there. I really hope this video helped you in learning more about Fibonacci arcs. Have fun with Fibonacci arcs. Mess around with them, plot them out on different charts, different time frames, and use them with other Fibonacci tools as well. Fibonacci retracements, Fibonacci fans. Use all of the Fibonacci tools that you can to see if they all connect at a certain price level to where all the stars align. As I said earlier, I love using Fibonacci tools to help me forecast future price movements in the stock market. I love Fibonacci. It's all around us in our everyday life, from nature, space, everything. If you're interested in more Fibonacci videos, I will leave a link to the Fibonacci playlist that I've created down below in the description. If you're new to the channel, hit that subscribe button, join the Trading Learning 101 community where we all grow as traders and investors. And until next time, everybody, have that patience, have that discipline, and study, study, study. Later, everybody.
The most valuable commodity I know of is information. Wouldn't you agree?